as a Brit in a post-Brexit world, which sounds like a song, a really bad one, actually, I found European regulators much more proactive in engaging me as an industry participant here in the UK, both before and after Brexit. So really interested to hear about approach to the UK. So today I'm really happy to welcome on the Metaverse show two people, both from Ripple, who are really helping drive forward a more kind of friendly, constructive policy framework across different jurisdictions for the wider Web3 industry, hot off the back of a white paper that they've released specific to the UK. But we're going to speak more generally first. Obviously, there's a lot going on more generally in Web3 and, of course, in the world of Ripple, the US and the SEC. So we have Susan Friedman, who is Ripple's head of policy, and we have Andrew Whitworth, EMEA Policy Director, so a Brit and somebody from the US. Welcome to the show. I'm actually really excited to talk about this, not just because of the UK perspective, although that is something obviously very close to my heart. It's where we're headquartered. It's where I'm personally based. And it's something I feel is a massive missed opportunity that's bothered me for some time. So it's great to have your backing. And we'll get into why specifically the UK. But let's just zoom out a little bit, talk more generally about what we're seeing globally from a kind of policy regulatory environment. Maybe we start, Susan, with you. Maybe quick intros to kind of your role. I mean, it should be fairly self-explanatory, but it'd be good to know kind of the remit and scope, and then we can kind of talk a little bit about how you're seeing things globally.
Absolutely, and thank you again for having us here today. I am head of policy at Ripple. I work on global policy issues with a focus on the US. And we focus, our goal is not only to get our products live in various jurisdictions, but we also actively look to foster global frameworks that work together so that at a macro level, crypto is able to thrive so that we're not creating walled gardens in specific jurisdictions. And in terms of what we're seeing with respect to how different countries are moving in this space, I think there's been a lot of positive momentum. So Singapore is one example. The EU just passed MiCA, which will go into effect in 2024. Brazil just passed a crypto regulatory framework for its jurisdiction. There are several legislative proposals within the US. And I think what you're seeing is this momentum towards building frameworks, creating clarity, giving industry the guideposts that it needs to be able to build in a responsible way while also protecting consumers. And that's momentum that we are looking to be part of and to foster, and what drove in part the release of our UK paper.
Do you think that we're finally reaching a point where there is a degree of harmonization across jurisdictions? Because previously it's been quite fragmented. Europe seems to kind of cut its own path. I think for a long time, people were expecting leadership from the US. That didn't come. And so there was very fragmented activities in different jurisdictions, whether it's Switzerland, Singapore, or other environments. Is there finally some harmonization and coordination?
I think we're slowly moving in that direction. I do think that the gaps in regulatory frameworks is what allowed ultimately something like FTX to happen. It's that regulatory arbitrage that takes place. And while we're not advocating for one single set of one framework to be implemented globally, we do think that there is a need for the harmonization that you touched upon to be implemented more consistently across more jurisdictions so that you do not have companies seeking to take advantage of the gaps. The US, as you pointed out, really has not moved as quickly as we think it needs to in this space. And we're hopeful that 2023 will be a breakthrough year. But there is still work to be done, though I do think the trend is ever so slowly moving in the right direction.
Well, that's good to hear, reassuring. So if we look at the US context, obviously a lot going on for Ripple and just the industry more generally post FTX. From the outside, here in the UK, personally, I mean, we're a global organization. We have lots of people in the US, but looking from the outside in, it's always felt like crypto is quite a politicized issue. There was very different perspectives on the industry as a whole, depending on whether you're speaking to the Democrats or the Republicans. Is that true? Is it, what's your perspective on it?
I think when you look at it from a US perspective, what's been really encouraging is that there has been the level of the dialogue between 2 years ago and now, when the Congress started, the 117th Congress started, and when it's ending is night and day. There is just a much more sophisticated level of the industry. And what I also think is encouraging is that you're seeing bipartisan support. So for every major crypto bill that was introduced over the past 2 years, there has been a bipartisan co-sponsor. Those bills, some of them are flawed. They haven't gotten all the way through the legislative process. But I do think that there is a more nuanced dialogue happening with respect to industry. And I think, though, on that same note, there's more work to do. A lot of it becomes difficult to cut through the noise when you have an incident like FTX to make clear that crypto is not just speculation. There are certainly consumers who speculate, but that is a small piece of the activity taking place. There are a lot of different use cases for crypto. There are a lot of different players in the industry, including ourselves. We are B2B. We don't market to consumers. And making those distinctions clear so that you can get the right policy frameworks in place, I think, is really key for us, for other industry actors. And again, part of the reason why we wanted to put forward the paper that we did in the UK, outlining our policy vision. The
conversations that we're having, and again, it's surprising how many institutions actually do understand the difference between what happened with FTX and is that representative or not of the wider industry. One of the big distinctions that we always try to make in how we communicate is this distinction between crypto and Web3. Crypto being how people may speculate on the value of Web3, but ultimately Web3 is the technology applied at an industrial level, at a use case level. Maybe just to kind of close off on the US context, obviously you're in the middle of a process with the SEC. I think there was something tweeted yesterday by your CEO. What can you say about where you are in the process, and how much is that kind of public communication through the medium of Twitter part of that process?
Twitter certainly has its audience, and there is a lot of news and information that happens on Twitter that I think has helped keep industry informed and enrich the debate, if you will. It is not the only means of communication, though, by far. And in terms of what we see for the lawsuit, the briefs in our summary, our motion for summary judgment, were all filed, both the SEC and Ripple's. We're hopeful for a decision from the judge in the first half of 2023, and we think that we have the right side of this argument. I think what's notable, we had multiple companies and groups file in support of our case. 14 different amicus briefs or friend of the court briefs were filed, which is unprecedented at this stage of litigation. Usually those sorts of filings happen at the appellate level. So I think the fact that we did have such a strong show of support demonstrates that the industry recognizes how significant the case is, that there is a chance for a significant decision to define how you draw those lines in the US between commodity and security. I do think, though, fundamentally that this isn't an issue that should be decided by the courts. Ultimately, what you really want is either the regulators to engage in rulemaking or Congress to engage in legislating. And what's encouraging on the congressional front is that we have leaders from multiple parties and multiple committees of jurisdiction calling for legislation, putting forth good faith efforts to try and reach the right outcome. That includes Chair Maxine Waters, Rep. Patrick McHenry, Rep. Emmer, there's Senator Stabenow, Senator Bozeman, Senator Gillibrand and Lummis. There are multiple allies, advocates that are looking to get to the right legislative solution. There is still work to be done. There's going to be a lot of activity in the next Congress, and we're hopeful that that will continue. At the same time, we believe that we're optimistic for a good outcome in the SEC litigation.
And obviously we've got, this show is really for founders. It has a broader audience than that, but a lot of founders listen to this at various stages from pre-seed all the way up to mature networks. For clarity, what would you hope the outcome is for founders, for the industry at the end of this process? Any decision
in the case or any legislation by Congress that allows founders in the US to understand how you draw a line between a token that is a security and a commodity is the ultimate outcome. Because at the end of the day, if you can't figure out who your regulator is, or whether or not someone is going to come in and file a suit against you, as the SEC has done multiple times over the past year with respect to different tokens in different contexts. But that's really the problem. The total lack of clarity and the fear that you are going to be brought in to face an enforcement action is what is going to keep the US from really becoming a hub for crypto innovation in the way that the UK aspires to be, in the way that I think we'll see the EU become. Because whatever you might think of MiCA, having a single rule book, understanding who your regulator is, the requirements that you're expected to live with when you go into that jurisdiction, that's what affects your ability to grow and thrive in any market. And that clarity is sorely absent from the US regulatory landscape at the moment.
So it's almost a perfect segue into Andrew within his remit in EMEA. Maybe we stay at EMEA level first before we drill down into UK. So you mentioned MiCA. I know many people, on the one hand, as you say, welcome it because it's some form of framework directionally and a way of harmonizing across the region. On the other hand, they think some things in it are too restrictive, potential overreach. What's your perspective on MiCA at large?
Yeah, look, it's as Susan just said. We think MiCA is good. It's definitely a step in the right direction. I think it's a marker globally for how jurisdictions can think about creating comprehensive crypto asset frameworks to provide the kind of certainty that businesses need to develop and to innovate and to be comfortable growing and providing their services to businesses and citizens, depending on their business model across the jurisdiction. So the fact that MiCA exists is good. The fact they did it, frankly, relatively quickly, both for the EU and other jurisdictions, is good and impressive. But you're right, the devil is in the details. MiCA's particularly good for two things, which you both just touched on. Firstly, the common rulebook across the EU. Secondly, the ability to passport, so the ability to provide services across the EU from one member state. Both of these are very good things that will support the development of a harmonized or a single crypto sector across the EU, which will have benefits for business growth and for activities provided to citizens. But there is work to be done. It hasn't yet been ratified by the European Parliament. That will probably happen in February. After then it becomes very much a question around the so-called level 2 agencies, so the European supervisory agencies, who will develop the technical standards and the actual specific requirements that will then be imposed on companies. And as you said, this is a very wide-ranging, the scope of this framework is very wide. So there's the potential for lots of specific rules, which will need to be calibrated, frankly. And the calibration can be a difficult process and a long process. But so far, I would say that the European policymakers, as actually policymakers in most jurisdictions, I would say, have been quite open to speaking to industry, to at least learn industry's perspectives, understand how certain requirements might impact industry and how industry might respond in, given whatever requirements they would be. So in that sense, I think there's a lot still to come on making MiCA real, but what there is so far is good. And I think MiCA as a whole, as I say, is a big step in the right direction.
as a Brit in a post-Brexit world, which sounds like a song, a really bad one actually, but song nevertheless. I found European regulators much more proactive in engaging me as an industry participant here in the UK, both before and after Brexit. So really interested to hear about approach to the UK. So I'm going to save you the rant, but for a very long time, I felt even pre-Brexit, the UK could play a really important role in the context of the crypto industry, digital assets, given its financial services sector, given its professional sector that wraps around it, given it being the primary source of venture capital in Europe, given its media entertainment, you could, the list goes on really. Now, of course, a lot of that's very much London centric, but nevertheless, a huge opportunity to be a leader in this space, both in terms of fungible, but then non-fungible assets as it goes into creative industries and gaming and media and entertainment. But I guess in some ways, understandably, the UK has been somewhat distracted. So I buy the why. I mean, it'd be good to hear from you why, beyond what I mentioned, why specifically you've focused on the UK with this paper over any other jurisdiction. But then secondly, why now? Why now do you think that the UK is ready, able to engage with this process?
Yeah, I mean, you hit the nail on the head with those two questions. I mean, I think the first thing to say is Ripple chose to make London, or a London office, our regional hub. A couple of years ago, we have around 70 people based here now. That number keeps growing. We see a lot of opportunity in London, and it's for a lot of the reasons that you were mentioning around the deep history in finance, the access to skilled talent, frankly, the openness of industry here, but also the wider policy and public culture to welcoming international businesses and international businesses to provide international services. So it's not just for the domestic market, but it's London as an international financial center. Obviously for Ripple, a B2B company, as Susan said, that primarily focuses on cross-border payments. This is very important for us to have access to these kind of counterparties. So that's why we've, let's say, on the business side, moved here. I mean, moving to the question around the policy. I mean, I think it's interesting that you say even pre-Brexit, perhaps the UK didn't want to be in the lead in this area. And that could even be because it has such a dominant traditional financial center. And I think what we've seen, I think, is it's taken a long time for industry, a traditional financial industry, to want to engage with crypto. And as soon as they have, they've quite appreciated it. And they're doing it in their own ways. And as you've both been talking about already, the crypto sector is incredibly diverse. There are lots of different activities, different business models, different uses for underlying technology. And I think you talked about it in the sense of Web3 versus crypto. Much more basically for me, it's a question of the technology versus the use case. And the underlying technology can provide a lot of different use cases. And as more and more financial incumbents have understood that, the more they've enjoyed partnering with companies like Ripple or developing their own services on this. And I think we've seen a parallel evolution in the thinking on the public sector side from policymakers. So that's kind of, for me, the context of what's happened this year in the UK. Obviously, the first half of this year, Rishi Sunak as Chancellor and John Glenn as his Minister, they made this big push to make the UK or develop the UK as a global crypto hub, as they put it. That's great. That shift in ambition, that shift in political ambition is I think what you've been advocating for a long time. I've read a lot of your tweets, and is something that obviously we, as a company that chose to make London as our regional base or a regional hub, we welcome this a lot. Now, as you say, 6 months have happened with a lot of high politics that's led to some delays. But the fact that both those people are now in more senior positions can only be good for the development of the policy framework that's necessary in the UK, or will be necessary in the UK, to achieve these political ambitions. So that's where we're coming from, or where we were coming from when we decided to write this paper. It's very much the political ambition is now there, the city is now there. What's missing? The policy framework. And just as in talking about the US earlier, talking about the EU just now, you need to have a stable, certain policy framework for businesses to be comfortable innovating, entering, and growing. So we're advocating for the policy framework, or we're saying what we think from the industry point of view, the UK needs to do to create the policy environment that will allow business to thrive here. For us, there's three things. One is the comprehensive risk-sensitive policy framework, which distinguishes between different risk profiles in the regulatory treatment of companies. This is an absolute given in the traditional financial sector. You think about the different rules given to a traditional bank, I don't know who, Barclays, versus a fintech company versus a financial market infrastructure provider. This is normal. But somehow when we're talking about crypto, that distinction gets forgotten. There's a real risk in doing that because you end up regulating the technology rather than the business. And this is something people say they don't want to do. And it has the quite strong possibility of stifling future innovation because it locks in the current technological frontier. And particularly in a sector like the crypto sector, Web3, where things move so quickly, that can actually be a real problem, particularly if other countries or other jurisdictions are not. So first, we need to have this risk-based, comprehensive crypto asset regime. Secondly, to manage this properly, we need regulators to have adequate resources. And I would say my interactions with regulators in the UK have been incredibly positive. They want to do the right thing. They're intelligent people who are trying to engage as well as they can according to their mandates on the topics at hand. But these are difficult and there are lots of different topics and they still have the day job of managing the traditional financial sector. So I don't see any other solution to just, they need more resources and they need to be comfortable spending resources on this sector in order to achieve the ambitions that they in their various public speeches say and that the government says it wants. And part of that resource thing is improved coordination because there has been, and again, I would say less over time, but in the past in the UK, there have been some mixed messages around how welcome this whole sector is in the UK. It's great that the political side is saying they want it. It's good that in some circumstances with the correct risk mitigation, some parts of the regulatory system are comfortable with it, but then other parts are still uncomfortable. And you think, well, hang on, we need to sort this out somehow. And then the third thing I think, which we call for, or which we argue is necessary to underpin all of this, sort of a foundation in the UK, is improved public education, public discourse around the crypto asset sector. But frankly, as a very first step, is recognizing the diversity of the sector, the different actors, the different institutions, different models, activities. And then I think from there, everything else flows. But without this improved discourse for the media, from public sector, from the way industry talks about ourselves, I don't see that we're going to be able to get to a sustainable place where, in a sense, I see that for me, the good outcome in the UK is that the crypto sector will be considered and treated and have the same sort of regulatory engagement as the traditional financial sector does. There are political differences around the benefits of finance, just as there should and will be over crypto. But everyone recognizes that it's an important part of the UK economy. It's an important part of UK's society. It has benefits to citizens. It also has some risks that need to be mitigated. And I don't see any difference between the crypto asset sector in its financial sense to traditional finance. So that's, I think, where we can get to if the UK seizes the opportunity that it has kind of right now to frankly catch up with where some of the rest of the world has got to.
Yeah, so how do we make that case? Because, I mean, like you, I've probably seen different parts of the UK government or regulatory bodies both communicate and interact in different ways. So I've had, there have been moments where the FCA, or equivalent of the SEC, has been incredibly proactive. They created sandboxes. I know that they were just about to publish some really interesting reports, and then it was pulled by, say, Treasury or and obviously we know Bank of England generally has been incredibly cynical of the crypto industry whilst pursuing CBDC various initiatives. So it looks very muddied, and that's with one party that's been in power for almost 2 decades. It's not even about different parties. It's just within one well-established party who had a significant majority for some time. Now, as we look forward, elections on the horizon, possible for the first time that we might have a different government, a Labour government. I've absolutely no idea of Labour's perspective on digital assets. I can imagine what it might be. That might be presumptive of me, but how do we create an argument here that can cross the divide and put in place things that can allow businesses like you, like us and our portfolio of 185 startups now choose the UK as a home for the next decade and want to invest in that environment with a degree of surety that whilst you can't remove all the other risks in this space, that the regulatory overhang isn't going to be one of them, right? Regulatory ambiguity isn't going to be one of them here.
Yeah, look, so on your very last point there, I mean, you're exactly right. What's your startups, what other businesses need, including Ripple, is regulatory certainty. And that's why I think an overarching crypto asset framework in law is what's needed. The individual requirements and rules can and should be and will, I'm sure, be calibrated according to the individual business model, risk type activity or risk of activity, as it should be. And that can change over time as people see whether they work or don't work, are too heavy or not heavy enough. That's fine. But the framework itself should be stable. And I think, to be honest, I'm quite optimistic. So I think that's what's coming in the Financial Services and Markets Bill that's currently going through Parliament. You know, it was really welcome that they added in last month, I think, the definition of crypto assets and brought that into the regulatory perimeter for the FCA. What I'm expecting to see after that, and when the next public consultation comes out, which could be this week, could be early next year, on the future crypto asset framework, is some kind of secondary legislation, a statutory instrument that hangs off that law, kind of creating this broad, overarching, stable crypto asset framework and giving the FCA the powers or telling it to use its powers to create the calibrated details underneath that. I think that is what's going to happen. I hope it's what's going to happen. So that will address your business certainty point, or hopefully should. I mean, on your kind of broader, more original point, I agree with you. Well, I mean, I haven't seen a huge difference, a bipartisan difference in the UK between the way different parties look at the sector. I don't think this is a party political question. I think it's a trend over time, and I'd say it's a trend over time that has become more nuanced, so more positive about some of the benefits rather than purely negative towards the sector. And I think that's been mirrored across both parties and amongst regulators and government. But I think, you know, the way to address people's concerns or the questions is to think about what their mandate is. You know, the Bank of England's mandate is very clear. It's financial stability and the safety and soundness of traditional banks. The FCA's is consumer protection. The parties obviously interested in protecting their constituents, or the MPs of the parties should be. Government wants to do all that while also developing the economy of the UK. So it's going to where people are. It's talking to them on what they care about. Now, that doesn't mean having different messages, because we don't have a different message. I think everyone frankly agrees a stable crypto asset framework will be good for businesses to provide them the certainty. It should be risk sensitive to provide protection to consumers and financial stability, market integrity, while encouraging and enabling growth. Everyone can get behind that. And then the individual sort of rules that get developed by the individual regulators in their space, of course, need to be calibrated towards their stakeholders, towards their industries and sectors. But I think it's quite doable for us as an industry to go forward with that same message to different people, saying, look, you're particularly concerned about consumer protection. You're particularly concerned about financial stability. Here's how what we're doing interacts with your concerns. And that should be done through the basis of a transparent and, as I say, stable kind of risk-sensitive crypto asset framework.
Jamie, I would just add in there quickly that the advantage too that the UK has at this point is that it is not the first mover. They have frameworks that they can look at for best practices. So they can see MiCA, they can look at what Switzerland did, they can look at what Singapore did, they can look at what Japan did and adapt as appropriate for the specific jurisdiction. And I think when you pair that with the UK's reputation as being a hub for fintech, I think I saw an article today that said the UK has attracted more, London has attracted more investment this year than New York or Silicon Valley. I mean, you have the right inputs to get to a great outcome with respect to regulatory clarity.
Yeah, and I think it's a really good point, actually, that the UK has the advantage of being able to see the competitive landscape and see its weaknesses. And I guess draft quickly, like create policy relatively quickly compared to the US, compared to Europe, right? The hoops that the challenge in creating any frameworks in a European context is, I mean, crypto moves so quickly, you then have to mobilize any number of different states almost to come to a singular decision versus a singular jurisdiction. Whether it's, Dubai, Singapore, or the UK, it has that advantage, and it now can see how the flops landed before it chooses to play its hand. And I think the big opportunity, which is what we've tried to do, is to make the case for GDP, because as you say, ultimately, everybody needs growth now, not just the UK, but perhaps especially the UK, given how things are looking. And clearly, if you can look beyond just very narrow financial use case, which is already large, and extend that to the wider web, why wouldn't you want to be a global hub for the next phase of the web and all the GDP growth that's going to come? So maybe it's on us to do collectively a better job of making that argument in hard economic terms. Just one final point quickly before we close off. Very grateful for your time. I know the audience would have found it really useful. You, Andrew, referenced a little bit earlier that there's some wider changes in financial markets and how they're treated happening in the UK. And I believe that there's potential, one of the potential outcomes of that is that pension funds can begin to be a bit more active. They can take more risk, both in terms of the extent, but also the breadth of investments that they can make, to be a little bit more on par with the US or Canada. I know's forged a path here. Some people think that means that could include exposure to digital assets, virtual assets. I don't know if you've got any particular insight into that.
To be very honest, I don't have any insight into that at all.
Stop the interview there then, Andrew.
Yeah, right. So I mean, everyone looks at the cost of regulation. We can talk about the public policy benefit of regulation like we have done. There are also commercial benefits to regulation, which is the increased trust. Now, normally we talk about that in terms of consumers trusting regulated institutions more. And that's true. And that's a good thing because they know that they are properly supervised, they're properly run, and usually there are some sort of safeguards if something does go wrong. Businesses obviously also prefer to deal with regulated entities for frankly the same reason. But that also means that their assets can then, depending on the individual law, of course, but the assets of a regulated institution are, in a sense, given preferential treatment over assets of non-regulated institutions. That's kind of the point of regulation. So I don't have anything specific to say to your question, but that as regulation in this space develops and as firms more and more get licensed in this space and their activities come within the regulatory perimeter, then you would expect them to be treated just like any other potential instrument. So we should expect to see that, and we should hope to see it. As I say, I think breaking down the distinction between finance that relies on crypto assets versus finance that relies on traditional financial rails and instruments should be the endpoint, or should ideally be the endpoint. If not, that's because there's something in the way, some regulatory thing in the way that says we need to make a fundamental distinction between similar activities based on the technology they use. And I think that would be a real mistake. People in public officials, policymakers have said in, I think, every country they don't want to do that. There is still a risk at every step of the way that people, lose track of what they're doing and drop the ball and end up doing that. So it's on us in industry to keep making the case, saying what we're doing is the same as what they're doing. You're very comfortable with that. You should be comfortable with us, given that you understand and appreciate how the sector as a whole operates, is regulated, and can be managed from a public sector point of view.
So let's just close off. I mean, you could both answer it, or just one of you. Do you think that the whole FTX thing, do you think that set us back? Or do you think it's actually accelerated the conversation that we need to have and the endpoint that we need to get to?
So maybe if I answer and then Sue, you can tell me, correct me. I actually think that the crypto winter earlier this year is the more salient thing. I think FTX, so far as I understand it from everything public, seems to have just been a fraud, and fraud can happen in many different industries under many different technological bases. It's obviously bad. Obviously, it's bad for the reputation of an industry because it all gets bucketed together. But actually, I think the big change came with, as I say, the crypto winter when that started earlier this year. Not necessarily a bad change in the sense of industry's conversations with regulators. My take is beforehand, during the boom, industry didn't necessarily feel it needed to engage properly with regulators. It didn't want to be that professional, and that not every actor wanted to be as responsible as it could. And regulators, I think, got quite defensive because they saw something going on that was, to be quite honest, out of their control, and they didn't necessarily understand. I think what the crypto winter did actually is reset that. So we're now, both sides are actually operating or working at the same pace and more or less at the same place. So in that sense, it's easier to have a constructive, professional conversation between industry and policymakers than it was, I would say. Now, FTX is bad and bad for the reputation of everyone, but I think that reset has maintained despite that.
I think I agree with Andrew. I do think, from my perspective, what FTX has done is really highlighted the need to have regulatory frameworks under which centralized exchanges like FTX have to register and be subject to oversight, and the need for that regulation to happen globally so that actors cannot take advantage of the gaps and operate in jurisdictions where there are fewer controls, less oversight, things that would have prevented this from happening to begin with. And a good example of that is that the U.S. arm of FTX was registered with the CFTC and does not have the same issues that the parent company did, the international entity did. That said, I do think FTX has made it more difficult in the short run, and I do think this will resolve over time. But to make clear that distinction, that there are different actors in the space, that crypto is not only used for speculation, that there are many different flavors of the industry, and that those distinctions need to be treated with some care. I think we're going to get there. I think the FTX debacle has muddied the waters a bit, but I'm optimistic for some good outcomes and some good policy outcomes in 2023.
That's a great way to end. Thank you both for your time. Just quickly, how can people find the paper that you released? And also, are there any industry bodies that you work through that people can join to collaborate with you?
The paper sits on our company website. It's fairly easily Googleable. It's called Block by Block. We've also sent it all around Twitter and LinkedIn if you look for us. And in terms of industry bodies, we do engage with a number in every jurisdiction we work in. In the UK, we're members of Crypto UK, as well as the Digital Pound Foundation, also Payments Association. Obviously, these are large and important industry bodies, so we do take part in those.
And Innovate Finance, I will add as well.
Yeah.
And in the US context, are you guys doing Digital Chamber of Commerce and Wall Street Blockchain Alliance and any of those?
We are members of the Blockchain Association and the Digital Chamber of Commerce. And I think that those bodies are important, but I also think that industry is diverse. Part of the reason we wanted to publish this paper is because we think that we have something specific that we wanted to add to the dialogue. And I think it's important for every company, I think, where they have something specific to say to take that initiative on themselves.
Great. Well, look, thanks again. I know the little guy out there, the founder, with life and death scenario at the moment, in many cases, looking into 23, can be reassured that we have people with organizations with the expertise of people like yourselves. So thanks for everything you're doing for the space. Definitely recommend people check out the paper. And then maybe we get you on later in the year to talk about, it could be MiCA or whatever else happens, this kind of positive policy that you mentioned, Susan. But thanks both for your time. Thanks for coming on.